Hey there and welcome. This week I had a question about the sunsetting of the Tax Cuts and Jobs Act. What exactly does that mean and what should we anticipate? So the Tax Cuts and Jobs Act, or here's an acronym for you, TCJA, passed in 2017 and introduced some significant changes to the U.S. tax code, including some of the lowest individual marginal tax rates we've seen historically. However, a unique feature of the Act is that many of its provisions are scheduled to sunset, meaning they expire at a certain date unless Congress actively renews them. As they say, the only things certain in life are death and taxes, but the TCJA actually creates some uncertainty for us taxpayers as we're planning for the future. Okay, so here's a breakdown of the sunsetting or expiring provisions of the TCJA. Most individual tax cuts expire. The lower individual tax brackets, increased standard deduction, and doubled child tax credit are all set to expire at the end of 2025. If not renewed, these changes would revert to pre-TCJA levels, potentially meaning higher taxes for many individuals. There are some business tax cuts that expire. Bonus depreciation for investments and the increased Section 179 expensing limit for small businesses, they have partial sunsetting provisions that gradually decrease or phase out in the coming years. There are, however, some provisions that were permanent and those items don't expire. They include corporate tax cuts. So this was a big deal in the Tax Cuts and Jobs Act, the reduction in the corporate tax rate from 35% to 21%. And that one is permanent. And there are some individual tax changes, modifications to the estate tax and alternative minimum tax. They're permanent under the current tax law. So why was sunsetting included in the Tax Cuts and Jobs Act? And there are several possible reasons for that. One is fiscal responsibility. Sunsetting provisions can limit the immediate impact on the national deficit of tax cuts. The expectation is that Congress would need to actively extend the provisions, potentially involving tax increases or spending cuts, which could lead to more responsible budgeting. Another reason is political compromise. Sunsetting was a way to garner broader support for the Tax Cuts and Jobs Act, as some lawmakers were hesitant about permanent tax cuts. The understanding was that certain provisions could be reevaluated and potentially adjusted or extended depending on economic conditions and political will. So what happens now? Well, while Congress could choose to extend or modify these provisions before their expiration, it's currently unclear what they will do. Therefore, it's really important to consider the potential tax implications of these provisions expiring when making financial decisions. And here are some tips for just navigating this environment of uncertainty. Most definitely consult with a qualified tax professional. They can help you understand how the sunsetting provisions could impact your specific situation and advise on potential tax planning strategies. And just stay informed. Keep track of the developments in Congress regarding the TCJA and potential action on the sunsetting provisions. When making financial decisions, consider the possibility of tax changes in the future and choose options that offer flexibility to adapt to different scenarios. At Elevate, we always say that financial planning is never static, but rather is dynamic in that plans need to change to adapt to the current environment. While the potential expiration of TCJA provisions adds a layer of complexity to future tax planning, it's changes that we can anticipate and be ready to pivot in your plan when these changes occur. At Elevate Wealth Advisory, we're here to help you understand how laws like this affect you and your financial plan. If your wealth advisor isn't doing this for you, we can help. Book a free consultation on our website. Visit elevate-wealth.com and click Let's Talk.